Good morning. This is the video newsletter for buysellshort.com for Sunday, October 25th. Sort of a slow week in the market this past week. We did see a lot of action. Boatload of companies beat on their earnings. I believe the number right now is 78% of the S&P 500 stocks are actually beating their earnings, which is an absolutely fantastic number. But of course, Wall Street really doesn't care. Market moves on hype, not on actual news. And, we've seen a lot of topping action in the market, especially over the last week. Small mid caps are essentially dead right now, and the market action we're seeing is really similar to what we saw back in June after the first earnings period of this rally, and then we just saw June just totally dead. Small caps lag, and the market eventually break down to new lows. Here we're looking at the Dow 15-minute chart. Um, doesn't look that great. We've got looks like a triple top on the 15-minute chart. We did just break out and down from that bearish rising wedge on Friday, but a couple of things to note here. We're about to get a positive MACD cross on the Dow 15-minute chart, and stochastics are down here around 20. And even though I suspect we're going to see downside this week on the market, we're probably going to see an upside pop on the market early tomorrow, just because every time we've seen a positive MACD cross on the Dow, we've seen at least some sort of bounce. That would be a bounce I would use to lighten positions, to be honest. And, like we've been doing for the last week, there hasn't been a whole lot of plays. We're essentially sitting on our hands, flushing our accounts, getting rid of those partial positions that we've been sitting on, raising cash levels, and just taking a breather and let the market decide what it's actually going to do. If we check out the daily chart, you can see we've been chopping back and forth here for the last 2 weeks. Support 20-day exponential, that is at 98.84, and a break of that, and we'll pretty quickly see a move down to the 50-day moving average at 96.60. The action, like I said, mirrors what we've been seeing back in June. We saw this happen in June for a couple of weeks, and then we saw a breakdown of 10% over the next 2 to 3 weeks. The Dow lost 800 points or 10%. We've been chopping around here. The average since the July rally has been about a 400 to 500 point retrace, which would take us down again to that 50-day moving average. Stochastics oversold. ADX is starting to show the funds are moving out of here. And one other thing, that's of concern. Usually get nervous when you see the four horsemen of the Nasdaq being pretty much the only strength out there. That's Google, Apple, Amazon, of course, no surprise on its earnings, and now Microsoft with its big move, and then pretty much everything else sort of dead to flat. So when you see that kind of action, that's usually the hedge funds are pretty stupid for the most part. They follow each other, they're like lemmings into the same kind of stocks, and that's why you're seeing the kind of move you saw on Friday in Amazon. They're actually using Amazon as a safety stock. One other concern, as you can see here on the SMH, this is pretty much what we look at to gauge the market, and we almost had a bearish engulfing candle on Friday. That's when the high and low of the session is higher and lower than the previous day's session. We almost saw that on Friday, and the SMH is looking a little toppy here and looking like it might want to retrace some. So again, that's another warning signal for us to just back off from the market just a little bit here and sit on high cash and see what happens. Hopefully we're wrong, and then if we're sitting on high cash, no worry, we can jump back in and buy new plays pretty fast. Also, the US dollar has been trying to show some support. It's been getting bashed left and right by everyone. But, a little bit of panic out there, and the currency that they bash all the time, the dollar, soon becomes or quickly becomes the safe haven stock. And the dollar's looking like it wants to bounce here. RSI stochastics are deeply oversold here and looking ready for a bounce. And also, if you check out the oil chart, oil's looking pretty toppy here. Funny thing is, these morons who come on TV, the quotation mark experts who bash the market, pretty much says the economy sucks, things are bad, don't buy into this rally. But, they're saying the reason oil's running is an expectation on a recovery in the economy. So these are the same guys bashing the market, but they're pumping oil stocks. I mean, it's kind of hilarious when you think about it. Oil really doesn't trade on fundamentals anymore. It hasn't for the last 18 months. Oil is essentially a currency. If the dollar goes up, oil goes down. Dollar's looking like it might want to bounce. Oil's looking toppy here. And, a retrace in oil is probably not going to be good for the market. And that's another, caution signal for us to keep an eye on. But anyway, jumping into a couple of stock plays, we still have some stock plays we're interested in. ASTM bouncing around its 52 weeks lows. As I mentioned, this is a stock we're looking to accumulate 36 cents and under. We're looking for a target of 50 cents in the next 3 weeks into its presentation on its heart drug trial. So we'll be looking to add this one around its lows. Also, ANX. This is an Amex biotech stock. We had been avoiding this during the Micromania because these guys were planning on listing on NASDAQ and doing a reverse split. The company recently did some financing. They've got enough cash now to last them well into 2010, and they've decided not to list on NASDAQ and have yanked the reverse split. So these guys are also presenting at a bio conference here midweek. So this one looks very, very attractive, 13 cents and under. Breakout is 15 cents, target 18 to 20 cents on this one. And, this is one that could move pretty nicely. It's trading around its lows, and, it's the kind of stock that won't take much news for it to spike on. ZHNE, fantastic earnings report last week, but as I've said, the small caps have been pretty much dead over the last week, and you've seen a lot of money come out of them. It's right back down to mega strong support down here, uptrend line, 50-day moving average. So let's see how it acts this week. As you can see, the retrace came on much lower volume, and that is one positive. But, traders are just not interested in dipping their toes into the market right now. You see a lot of traders, just like ourselves, sitting on the sidelines waiting to see what happens. So we'll continue to hold our core position and see what the market brings us this week in this play. Our radio stocks, RGCI and SBSA, looked like they were going to bust out big this past week, but probably as a sign of things that were to come, what should have been a big breakout to the upside ended up having profit takers move in. We still like the plays, would not be overloaded in them. They're holding above support at the 20-day exponential, and they've got earnings coming up in a couple of weeks. So, as I said, we're continuing to raise cash. These partial and minor positions, you can look to sell into strength. You can look to reduce position sizes. Ideal cash percentage is 50 to 75% right now. We can quickly and easily move back into these stocks once strength returns into the market. So, don't be worried about that. Idea is to risk as little as we can while we see what market direction turns around. And if you're actually looking for some shorts, a lot of these stocks that the market's been chasing here, like Apple. Apple is one of those stocks that loves its 20-day exponential. As you can see here, it always dips back to its 20-day exponential. Right now, we're, $10 plus or 5% above the 20-day exponential. So if you're looking for a short, probably a put is a better play here. You'd be looking at, maybe a November or December 190 put on this one with a target of selling that when the stock breaks down below 200, and low risk and high reward, and it gives you an opportunity to play some of the downside. The same is true of Google. Let's pull up the Google chart here. Google, sort of the similar kind of stock, has been bouncing around here at the top. Another stock that loves its 20-day exponential, rarely trades too far from it. We're, again, 5% plus above its 20-day exponential. This is another one you could probably look to nibble a small put position play, November or December puts on. Well, actually, probably December is the better play here. Just to get some short exposure if you're looking for that. Otherwise, just sit on high cash for now until the market decides to show us where it's going. Now, we'll be keeping an eye on some of the flu plays tomorrow. SVA, BCRX, GNBT, of course, NVAX. The charts look really ugly on these. We're just going to be looking to see if any sort of momentum comes in. President Obama has declared a national emergency. So we'll see if traders come in and there's some momentum in the flu plays tomorrow. If there's not, it's going to be another signal just to back off and watch the market right now. If you've got lots of plays that you've been sitting on for some time, don't feel bad. You can ease out of them. You can always rebuy stocks on strength. So some of these plays that we've been sitting on for forever and a day, like BNX, UDW, SLTC, etc., if you got the patience to hold them, they're trading at their lows right now. Downside is minimal. If you don't, you can always sell out and then rebuy on strength. So, that's really it for the video. Again, we're taking a really cautious stance. We should see a pop on the open tomorrow, and you can use that to sell or reduce some of your positions. And that's pretty much it for the video. See you guys in the chat room tomorrow. Goodbye.